What is going on, everybody? In this video, we are going to cover moving averages. The reason why it's important for you to understand how to use moving averages or other technicals is because it doesn't matter what market you're trading, whether it be stocks, indices, crypto, futures, ETFs, bonds. You will need to learn how to use some technical indicators in one aspect or the other, whether that be the RSI, whether that be the moving average, even if you are using fundamentals to trade, because it does not matter whether you want to day trade or whether you want to use fundamentals and trading options or stocks or long-term trading. You will have to have some form of understanding of these technical indicators to let you know when the time is to buy, when the time is to sell. So in this video, we're going to cover moving averages. So without further ado, let's get right into it. So what you are looking at here, guys, again, is TradingView. You all should know by now, if you view my channel, that I use TradingView to chart and execute my trades. If I am trading options, I still use TradingView to chart and let me know when to get in, and then I enter in on my Robinhood app. A lot of traders use TradingView for their go-to platform, and this is mine. So what you are looking at here is a chart with the multiple EMA on it. Now, the multiple EMA is the multiple exponential moving average. So it's geared to smooth the most recent data points without all the lag that comes or that is associated with the regular moving averages. So it reacts quicker to price. And moving averages are just what they sound like. It is the average of price that moved over a certain period of time, and it is plotted on the chart. So if you have your moving average set at 9, that is the price, the average of the price for the past 9 days plotted. So all of these, if you can refer back to math, some point at grade school, we all had to plot points on a chart and connect the dots. That is what these lines are. So I have the multiple EMA. That is what I use. What I have for my inputs is 9, 21, and 100. A lot of traders are different. Some traders are different. Some traders use the 20, the 50, and the 200. Me, I found that the 9, the 21, and the 100 work best for me. So that is what I have mine set at. So you can change that setup under inputs. You can go here and you can change the number, and you can see how price starts to move. So I have mine on 9, 21, and 100. Next to inputs, you find style. Style is where you can change the color of the moving average if you would like to. And you can also change what that line will look like. You can have it as an area. You can have it as a histogram. You can have those as crosses. You can have circles. You can have columns, but I simply use the line, and most traders I know use the line, but there are some people that I like to overcomplicate things. For me, that's what I find overcomplicated. The visibility, I do not change these. They are already set to how they need to be set. Now, this is going to be a real quick video, guys. The way that moving averages are used is simple. When the smaller line crosses below the larger line, that is an indication of bearish momentum or a downtrend. So here, as we can see, the smaller line crossed under the larger line. You see that? The blue line was the 9, remember? The yellow was the 21. They crossed. Now there are other things, this is beautiful. This was yesterday's move, but there are other confluences sometimes that you need to be aware of, because every time the line crosses does not necessarily mean it's a time to trade. Sometimes it isn't a time to trade, so you want to use other confluences with those. But typically when you see these, it is a good sign to get in. Now this is more powerful because the 9, the 21 both crossed under the 100-day moving average, which let us know there's a stronger trend coming in. Okay. Now, another way to use moving averages is basically if you see the moving averages are flat, like here, in this section here, if the moving averages are flat, the trade is off. If the moving averages cross, like here, the trade could potentially be on. There's other things in play here. We crossed below the 100-day moving average. We're trying to, we broke through it. We're trying to break back above it. We can't break back above it. We go lower. But that is not nearly as powerful as this cross here. All right. So how it's used in the uptrend is if the smaller crosses up and above the larger, that is a sign of bullish momentum or a bullish trend. So the smaller crossing under the larger is indication of bearish momentum or a bearish trend. The smaller crossing up above the larger is indication of bullish momentum or a bullish trend. So as you can see here, the blue, again, which is a 9, crossed up and above the yellow one, which is the 21. And what do we have as a result of that? We have a nice bullish move to the upside. And as you can see, where price starts to kind of battle and it starts to wick out is finding support above the 9, the 21, and the 100-day moving average. Once we kept closing above that, you see how price started to ride them up. Now, this price action isn't very clear. The markets it is election time and it's the end of the year. Markets have really been crazy. We've been getting crazy swings to the downside, to the upside, these larger candles. But typically, this is what you would look for. Again, if you were to see the 9 cross up above the 21 at the same time that they crossed the 100 moving average, just like you've seen over here, when it crossed to the downside to give us bearish momentum, if you see the same thing happen where the 9 crosses up above the 21 and gives us bullish momentum, right? If it crosses at the same time that it crosses the 100-day moving average, most of the time your other indicators that you use will all be firing off and letting you know that the trade is on. Now, when I say firing off, they're not going to say buy, sell unless you're using like a buy or sell bot. But even that depends on time in the market and knowing what to set the inputs as. So that is typically how you use the moving averages. It's very simple. It doesn't have to be complicated. Some people just trade with one moving average. You can actually take these off and just use the 9 if you want. You can use the 21 if you want. You could say, below the 21 we're bearish, above the 21 we're bullish. It really just depends on you. I use 3 now because that is more powerful. I like when it crosses because that lets me know that we could potentially be going higher. But when we get to doing things like this, to where we are kind of going sideways, I'm looking at other indicators and say like this box for a break. And I'm looking for the moving averages to change. Okay. And then the 100-day and the 200-day is powerful. It's a powerful tool to use. So I started using those in confluence with the crosses of these moving averages. See here how we have, it's not necessarily at the same time, but it's close enough. We have a cross of the moving averages, the smaller cross below the larger, and then they both cross below the 100-day moving average. And then we have this nice move to the downside. We have a nice bearish move. We have a nice sell-off there. You can wait. If you're patient enough, you can just wait. These show up all the time. Look, it shows up here. If you want, you could just wait for those trades. It shows up here. Now, some of you may be wondering when to get out. That is at the discretion of the trader. And it is up to you to learn to read levels, support and resistance zones by looking left, right? Looking left, understanding the levels, understanding what the zones are, understanding price action, what that looks like, understanding what reversal patterns look like. That is all at the discretion of the trader. So guys, that is how you use moving averages. I hope you find some value out of this. Feel free to comment any future video you would like me to do in the comment section, and I will try my best to get to it. I do have a list of videos that I am working on coming out, and I have to do these in order for the people who are just learning how to trade so that it makes sense to them. So thank you for watching this video. Thank you for your time. Please don't forget to like and subscribe. If you find value out of this, that lets me know you want to see more. God bless and trade well.